each person has to stay within their own zone, because one of the biggest things to fight, and this goes into kind of some of the same type of thing like discipline and psychology, is we all have to fight emotion. Emotion is what is the undoing of an investor or trader. It basically makes them buy Bitcoin at $68,000 and it makes them panic and sell sub 20,000 when maybe that's not the time to do it, right? So you have to look at that discipline, and the way you control discipline is to limit your position size. Like, I'll tell you, easy way to learn. Number one, and this is what I do to this very day, when I find a level that I like in a stock, number one, using the technicals. Number two, I never go in with a large position to start, because the markets are unpredictable. Fear and greed are ruling the market. So what I'll do is I say, okay, what's my full amount that I would commit? And by the way, that full amount was what I bought the first entry on that stock. But instead I say, what's my full amount that I will commit, and I will not go higher than that. And I'm gonna do like a 1/6 position. So I take, let's say $100,000, divide it into 6 equal increments, and then that first entry, I only put 1/6 in. Now what that does is it limits your upside if you're right. If you're dead on, it limits your upside.
Yeah.
But that's fine, because in trading, the most important thing you can do is limit your downside.
I think what will make us happy as we go into a lower time preference mindset will require less sort of immediate gratification. But at the same time, like, the prices of everything will fall in terms of Bitcoin. And you know, they're kind of related, because, you know, the more Bitcoiners there are, and, you know, especially for those of us that have been in it for a while, yeah, you're not impulsively spending anymore, right? Like, or, you know, if you do, it's like for a small amount. You're not like going out and getting a new car because you're, you know, feeling depressed or something. Like, that's not what you tend to do once you've been in Bitcoin for a while. So, you know, enough of that, and, you know, prices start to lower for that reason too. I will say though that in bear markets,
risk assets are in the eye of a hurricane. And as is normal, the leading edge is worse than the trailing edge in actual effect, but, you know, you never know what will be the damage. So my thought process is simple. Bitcoin was in a trading range, as you know, for a long time with a 30 support, you know, somewhere the 28 to 32 range as a support, the upper 40s as the upper band. After it fell off its all-time high. And then with all the mishigas that happened over, you know, the summer and the late spring, it crashed through that all the way down to 17.5, and then stayed for over a month in the range between, you know, basically 18 and 22. And only with this rally, you know, did it get above 22, and, you know, it's still there, but, you know, who really knows? I have a few reasons why the eye of the hurricane thesis is relevant. First is because I'm old and I remember what 2000 was like. And as far as risk assets go, if there's one thing we know about Bitcoin over the last, you know, 4 months, is it's been tracking ridiculously closely to NASDAQ and tech high flyers. The risk assets are crashing because the Fed raised rates, and it's a risk off time, and there was leverage in the financial sector, etc., and people were deleveraging. The leverage was much more extreme in crypto.
I always tell people is the market's going to make you pay. It made me pay immensely, right? I mean, I could have become a brain surgeon almost, you know, with that type of money in terms of investing. Now, I'll tell you one thing, investing is way better than being a brain surgeon, right? You have the freedom to sit in your underwear if you want and trade. If you can get trading down and investing down well, you can do it from the comfort of your home. You can go to a Caribbean island and do it. Anywhere that has internet, you are a free individual that can click a mouse button and make hundreds or thousands a day.
The Federal Reserve is in a situation where I think what they're going to do is, I think they're going to start doing one of these things where the right hand, they say, or the left hand, they say, I'm raising interest rates to control inflation. But behind the scenes, which people aren't looking at, I think they're going to start quantitative easing again to buy assets. And I believe, and I know this is an unpopular opinion, I think they want a seriously inverted yield curve. I think that governments and corporations, when they do investments, borrow long, and individuals, when they spend, borrow short. And if they can somehow engineer cheap borrowing for the government, which they need, otherwise government's bankrupt, that is not so bad for, you know, long-term investments. But at the same time, they have to be worried about inflation because obviously it is the biggest, most regressive stealth tax on the poor that there is.
It's very hard to be just a pure influencer, which unfortunately a lot of these people are. Like the thing that you need to do as a quote unquote influencer is, you know, your expertise is in marketing, right? Like that's how you make your money. And the thing is that it's always going to be more lucrative to market in the altcoin sphere than in Bitcoin because there's no pre-mined tokens or anything like that for you to go and grab. And you know, you're living a lot more honestly, I think, in Bitcoin, and a lot more fraudulently in altcoins. But let's face it, you're going to make more money doing it in altcoins.